and good morning. Welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly, your queries during the show. So please keep commenting on our feed. We'll have your questions addressed towards the latter part of the show. Before we kickstart, let's see what the global handover looks like, what the big news is. US stock futures are little changed after Wall Street closes the week on a positive note. Now, on Friday, US stocks ended lower as investors assessed hotter than expected jobs data amid expectations of smaller rate hikes. Asian markets higher in early trade and the SGX Nifty also signals a positive start for the Indian market. Oil prices remain volatile as G7 imposed price cap on Russian crude and the European Union ban on seaborne imports of oil from Moscow kick in. Brent crude trades below $88 a barrel a day after OPEC and its allies decide to stick to their 2 million barrels a day production cut. European markets closed lower on Friday as investors digested news about China's COVID-0 policy and US non-farm payroll data. As Indian markets continue to march ahead, we try to analyze if one should sell the rally or buy on dip. Stocks in focus today: M&M Financial, Ion Exchange, IIFL Wealth and Krishna Institute of Medical Sciences. All right, guys, let's get going and discuss some of the stocks that are likely to be in the spotlight. But before that, I want to bring on board my colleague Madhuchanda Day of MC Pro to talk about the fundamentals of the market, the big trends that are playing out as we speak. Morning, Madhu, and thanks for joining in.
Good morning, yeah.
What do we make of the resilience that the markets have been showcasing last many weeks now, despite weak global cues, despite the state of the economy that we're looking at? What have been the triggers, and are there more legs to this rally, or are we close to the peak?
Absolutely a very relevant question at this juncture. Let me start with the Indian backdrop. Well, we have been highlighting, and many market experts have been highlighting, the resilience of the India story. And that pretty much is playing out beautifully over the last several months. As you have seen that, most of the headline data are getting a little better. And if you look at the second quarter earnings numbers, they were pretty much in line with positive surprises in few pockets, especially, something like banks and financials. So in terms of earnings, the picture has been good so far. And looking ahead, what we see in the coming quarters could be a tad better because demand is picking up post-COVID. And on the input side, which was like a reason for gross margin pressure, there seems to be some good news with commodity prices moderating across the board. So it's a confluence of two good factors. One is strong demand, and the second is sobering of commodity prices, which augurs well for earnings and for overall Indian macro backdrop. And this is definitely a positive for the markets. And then there are other factors which we have often discussed, which is the strong support from domestic liquidity. Although this month, the last month, November, FII flows have also been very strong. But wherever this year has not been a great year for FII flows, but we have still done well thanks to the domestic flows. And last but not the least, the global backdrop is improving. Powell's statement last week clearly hinted at much more calibrated rate hike and possibility of a soft landing. So all this creates a backdrop for a good, year-end rally.
Okay, all right. So looks like we are going to continue at least over the foreseeable future as far as the resilience and the strong up move in the market is concerned. But do you recommend that retail investors, people who are watching us and want to know about the next steps, should they at least book part profits right now, or should they just stay invested for the long haul?
It's a personal investment decision. If you are someone who would like to take some profit at 15% and then reinvest at the lows, that's a personal investment decision. But having said that, there are a few things to remember about Indian markets. Although markets have rallied and we have been relative outperformers in a global context, we have not rallied too much from the highs that we had seen last October. And if you look at the valuation of this market on a FY24 basis, because FY23 is kind of drawing to a close in a quarter's time, we are still lower than our long-term average 1-year forward valuation at 19.5 times. So there is headroom for this markets to move up. Having said that, we must remember that given the global backdrop and given the linkages and the volatility, a bad day is here to stay. So there will be bad days, there will be, speed breakers to this journey. So if you want to sell and then re-enter, that's a perfect strategy. But this is not a market to sell on rally, but this is a market to buy on decline.
Well, that's very aptly put, Madhu. But what about the sectors that we like right now? Any of these underlying themes that you guys are looking at closely, which has good potential from even the current levels, despite the run-up that we've seen, which provide valuation comfort and good reward going forward?
Honestly speaking, sectors which are promising will always appear to be expensive. But definitely domestic themes are looking very, very interesting to us. All discretionary consumption themes are looking exciting to us. Anything to do with defense, outsourced manufacturing is looking interesting to us. So these are pockets of these are pockets of strength. And also some of the export-oriented sectors. Of course, exports are not in the best of shapes, but there are pockets within the technology space where we definitely see upside going forward.
Okay, well, looks like these themes could play out well, actually, the ones you flagged off, and especially tech. There is a good rebound that we saw in the recent week, but we have to wait and see how much more can it really, how much more the rally can sustain, and are there meaningful levers in place. But I will bring you back on the show for that. But today was all about the markets, and thank you for joining in and sharing with us, the trend that's playing out and how things are likely to pan out as far as the broader market is concerned and the mood is concerned. Thank you for joining in. Let's take it across to Rajesh Palvi of Axis Securities now to talk technicals. Morning, Rajesh, and thanks for joining in. How are you reading into the trade setup, the indications that we're getting in from SGX Nifty, largely positive?
Good morning, Karanya. So overall setup is positive, and buy on dips is the strategy which one needs to follow at this current juncture. Overall, if you look at the last week action in the market, most of the sector which were underperforming has contributed and participated in this upward momentum. So overall, both the indices Nifty and Bank Nifty are looking very promising, and we feel that this upward momentum is likely to continue further. And possibly we can see a level of 18,850 to 19,000 in the continuation of this uptrend only. Though we have seen some bit of profit booking in the last week, in the last half of the week, but overall still the structure is positive, and buy on dip should be the strategy. Until we don't break below 18,400 level, one should ready to buy any dips near to those support area. For Bank Nifty also, the setup is positive, as we are seeing on the derivative front also. A lot of put writing activity has been there at 42,500, 42,800 strikes. So which these levels are likely to act as a good support area on the any kind of minor corrective action in the market. So overall for Bank Nifty also, one should remain on the buying side. 42,500 should be stop loss. On the higher side, once the Bank Nifty manages to cross above 43,500, 600 zone, then another round of short covering action we can witness in the Bank Nifty also, and possibly next target for Bank Nifty towards 44,000, 44,500 on the upside. So both indices are looking for positive, and we suggest to buy on dips should be the strategy for both the sector.
Okay, all right. Let's talk about some stocks that could be in the limelight today on back of news flow. The first name I want to highlight is IIFL Wealth. Now, promoter Nirmal Madhu Family Private Trust has offloaded shares close to 95 crore rupees. The promoter has sold essentially 5.3 lakh shares at an average price of 1800 rupees a piece. Now, IIFL Wealth has been a slow and lackluster sort of a stock last 1.5 months. What kind of a trajectory do you foresee from these levels?
So currently, overall, if we analyze this stock, almost since last 3 months, the stock is consolidating in very narrow price range. The range for the stock is around 1700 to 1900. And looking at the overall behavior of the stock, we believe that if stock continues to hold above 1740, 1730 level, then possibly again the stock will start upward momentum. On the breakout of 1840, yes, stock will continue its upward momentum. Overall setup for the stock is on the bullish side. So buy on dip should be a strategy. One can keep a stop loss of around 1700 to remain invested in this stock.
Okay, all right then. Moving on to the next name on our list, that's Krishna Institute of Medical Sciences. General Atlantic Singapore has sold 215 crore worth of shares. Close to 14.5 lakh shares have been sold in KIMS at an average price of 1480 a piece. Now, an interesting name has also lapped up shares of Krishna Institute at the same time, Mansa Holdings. Now, they have bought 14 lakh shares of the company, again at the same price, 1480 rupees a piece. Rajesh, how is Krishna Institute looking on the technicals? I know there's not too much of a historical trend to read into, but any sort of crystal ball gazing that you can do for us?
So if you look at the near-term setup for the stock, stock has formed a rounding bottom formation on the daily as well as on the weekly chart, and breakout is already done for the stock. So looking at the breakout on the near-term setup, we believe that if stocks continues to hold above 1440 level, then possibly there is a high chances that stock may manage to give breakout above 1580, which is the immediate hurdle for the stock. Once the stocks manages to cross above 1580 level, then possibly stock can scale up further higher towards 1750, 1780 level on the higher side. So again, in this stock also, we recommend to buy on dips should be the strategy. Overall setup for the stock on the near term to short term is on the positive side. Keep stop loss of 1420 to buy your position in the declines.
Okay. Moving on to M&M Financials, they've reported a 75% growth of disbursement in November 2022 at 4,500 crore rupees, given the positive macro environment. Collection efficiency has come in at 96% versus 94% in the same month, which is November of 2021. So there's been an improvement there as well. Now, M&M Financial is something that we have been discussing on and off last couple of weeks on back of different news flows and investor interest. Rajesh, talk to us about how the technicals look to you.
So we have seen a strong recovery from the low which stock has formed in the month of March. Now stock is approaching towards its February 2022 high, which looks on the technical front, it looks positive. And looking at the setup, we believe that once stock crosses about 235 level, then this stock can inch up further higher towards 260, 280 zone on the short-term basis. So our advice is to buy. If any dips comes towards 220, 215 is again opportunity to buy the stock. Overall, near-term, short-term setup looks positive. Stock is trading above all its important long-term moving averages. So buy on dip should be the strategy. Traders can buy aggressively above 235, which is breakout level, and keep at this current juncture, keep stop loss of 215 to buy at the current juncture also.
Okay, all right. The last name on our list today is Iron Exchange, a name that we rarely discuss actually. They've bagged a contract worth 340 crores from Indian Oil for a zero liquid discharge plant at their Panipat refinery. Now the project will have to be commissioned within the next 16 months from the date of LOA essentially. Talk to us about Iron Exchange. Phenomenal uptick seen last 1 month. Can the run rate continue?
So very strong setup on the monthly as well as on the weekly chart. And looking at the setup, we believe that this stock can continue its upward momentum. And on the higher side, possibly stock can inch up further higher towards 3,000 level also. So those who are holding and buying at the current level also can hold the position. Keep stop loss of 2,700 to remain invested. 3,000 should be the next target for the stock. Very strong buying action with volume is visible on the weekly chart. So we expect that this upward momentum can continue further.
Okay, all right. Let's address some queries and comments also coming in on our live YouTube feed. Lots of interesting questions here. The first one, of course, is on ONGC. In fact, a couple of viewers have been posting about ONGC and wanting to know what's the way forward, what's the likely way forward, looking at the technicals. So what do you think?
So looking at the setup for ONGC, the stock is struggling to cross its multiple supply zone of 145, which is very important for the stock. If at all stock crosses above 145 on the weekly closing basis, then possibly stock can move up towards 158 to 160 zone. Overall, from near term to short term perspective, setup for the ONGC is on the bullish side. Buy on dip should be the strategy. 132 should be your stop loss. On the breakout of 145, a trader can buy aggressively also for 160 target.
Okay. Moving on to the next question. This is from Rohit. He wants your view on Dabur. Now, Dabur has been doing quite well and has been quite the talking point as far as street chatter is concerned. Do you think it has more legs to the rally?
A very strong buying action we have witnessed in the last week for Dabur, and stock now managed to give breakout of its falling trend line on the weekly chart. Looking at the breakout on the weekly setup, we believe that this stock can move further higher. Stock is trading above all its important moving averages. The stock managed to give a breakout of its previous swing high of the September also. So looking at the overall setup, we believe that stock can inch up further higher towards 615 to 625 in the continuation of this uptrend. If you have already bought, keep stop loss of around 578 for your long position.
All right. Okay. Let's move right on to the next query. This is from Pradeep. He's asking if he can buy ITC at the current price point. It has cooled off a tad from its 52-week high, but it still continues to be very firmly above those 330 levels actually. So talk to us about whether it's a prudent idea to enter now.
So if you are looking at only trading perspective, so my advice would be avoid at this current juncture because stock is very sideways and muted price action is there. If you wanted to buy for investment perspective, yes, it's opportunity again to buy in the dip. So if you are investor, buy this stock in the dips, keep stop loss of 320. Looking at the setup, we believe that once the stock crosses above 350 level, then it will start, upward momentum towards 380, 390 zone. So overall structure is positive, but for trading perspective, it's very muted at this juncture. The price action and momentum will pick up only above the breakout if it stocks manages to be above 350 zone.
Okay, all right. The next one. Is from Chirag. He wants your advice on Map My India. Again, a very lackluster mover, whether we look at the 3-month chart, 6-month chart, even year to date, the stock is down 30-odd%. Good idea to stay invested here or invest right now?
No, I'll suggest to avoid at the current juncture because overall setup for the stock is on the bearish side. Continuously, stock is forming lower top, lower bottom formation. Stock is trading below all its near-term, short-term moving averages. So I would advise here to avoid at the current juncture also until the stock not crosses about 1300 zone. It will remain under pressure only. If at all stocks breaks below 1160, 1150 zone, then possibly again stock will continue its downtrend. So at the current level, I'll advise to avoid at the current juncture.
Okay, all right, makes sense. The next query is from Amarjeet. They want your view on Tata Motors. Now, it's off about 80-90 rupees from its 52-week high, hovering at those 530, 540 range. Talk to us about the likely, way forward for this one.
So Tata Motor now crossed above its 200-day moving average. So again, we have witnessed, multiple times stock has shown, profit booking around these level only. So 440, 445 is very critical juncture for Tata Motor. If at all stock crosses above 445 level on weekly closing basis, then this rally can continue towards 465, 475 zone. Overall, stock is in broad consolidation zone. On the monthly chart also, if we analyze since last 8-9 month, stock is consolidating in broad range of 385 to 440. Again, now stock is trading near to its higher band of this consolidation zone. So that's why we are saying that 445 is the important level. In this uptrend, if it crosses and give the breakouts above those levels, then possibly 465, 470 should be the target. If you are investor, hold your position. Even on the decline also, we advise to buy and accumulate the stock. Long-term setup, we believe that stock can do well in the long-term basis, but in short-term, some consolidation we can witness in the near term.
Okay, all right. I want to address this next question coming in from Satya. They bought Granules India at 325 rupees. The stock has been consolidating quite a bit and they want to know if they should add more or exit perhaps if it looks off right now going by the technicals. What would be your advice?
So since last 4 months, stock is forming lower low formation on the weekly basis. So which clearly shows some selling or some supply pressure is there, sustained supply pressure is there on the stock. Even in this decline, stock is now trading below its 50-day moving average, which is also adding up some bearishness on the near-term setup. Stock is trading now near to its important support area of 335, which is very important and critical. If at all stock holds this 335 level, then some pullback action we can witness towards 350, 355 zone, which is again, a resistance zone on the stock for the near-term basis. So our advice would be to exit around 355, 360 zone because overall supply is there on the near-term, short-term setup. Keep stop loss of 335 if you are holding your position on the long side.
Okay, all right. Rajesh, how about the stocks that you are tracking right now in the market? Anything that looks attractive to you?
So one is from NBFC, that is L&T Financial Holding. If you look at the overall setup, the stock managed to give a strong breakout in the last week. And looking at the setup, we believe that this stock can inch up further higher towards 98 to 105. One can buy L&T Finance with the stop loss of 86. Another stock is from Midcap IT, that is Emphasis. If we analyze the overall setup for this stock was consolidating for last 3-4 weeks, and now price action has given a breakout on this consolidation zone. Overall, Midcap IT has performed well in the last week also, and looking at the overall Midcap IT space, we believe that Emphasis can move further higher. 2300 is the target on the near term to short term. One can keep stop loss of 2080. Another stock is from cement space, and we believe that cement space can do well. The stock is Ultratech Cement. Stock managed to view breakout of its multiple resistance zone. Even on the daily chart, if we analyze the stock managed to view breakout of its inverse head and shoulder pattern also. So looking at the overall setup for Ultratech Cement, we believe that this stock can rally further, and 7500 to 7600 should be the target on the short term basis. One can keep stop loss of 7160.
All right. Okay. Thank you so much, Rajesh, for sharing your picks and for your, sharing your advice and your observations of the market and a host of stocks with us and our viewers this morning. With that, it's a wrap on Morning Trade. Thank you for tuning in.